Fortinet is revolutionizing cybersecurity, and with the latest super investor 13F release, we saw Terry Smith adding more to his portfolio, 10% increase. Actually, it's 11.5. Okay. So should you consider adding Fortinet to your portfolio? First off, I want to say I already own the company at $60, $66 cost basis. So maybe you want to consider that into the equation as I talk about it. I might be having some biases. Anyways, if we look at their financials, the revenue has been increasing year over year, but has been slowing down. TTM 11%. I think is fair now because they're so big and they're doing some changes in their business that I'll talk about. They have a fairly good moat on their business. It's hard to compete against them. If someone starts using Fortinet, it's hard to stop using them. You can see it how it trickles down to profit margin. Operation margin and profit margin is not big gap in between like other businesses, like Walmart. I think like you see Walmart has basically half its operation margin in profit margin. It's another different business model, but it's not a competitor. But they really don't have. They have competition, but they can't play on their field, so to say. It's hard to get customers to leave. And if we look at shares outstanding is reduced, which we like to see, especially that it helps EPS. And so when we do a valuation with earnings per share, a hidden, so it makes the valuation a bit more safe. Instead, if you compare it to a company that's diluting heavily, that might see shares double every year, can't really use EPS to predict anything or value anything if they're diluting you heavily. Selling and general and admin is flattening out, so that's nice to see. They seem to have hit some kind of cap. They don't really need to put a lot of money in marketing, and a company like Fortinet can increase their price to the current customers without facing too much of a backlash. Like their customers can't leave. It's their business security. So they're kind of stuck even if Fortinet increases cost for the products. Let's see. Let's go to balance sheet. Property and plant is 1.2 billion and it's not really growing too fast. We like to see that. And 1.2 billion, and then we go to operating cash flow is 1.9. It's kind of flat. I actually want to see this pick up again, but it's a big company. It's not Celsius or a small company that can move around a lot, release a lot of new small products. They need to put a lot of money down to release the next cycle of security software. As you see here, they have a lot of software and protective measure for security risks for companies. Fortinet still has room to grow in cloud security operations, and they have been successful the past 5 years of growing these sectors. Here we get a better picture of how net income comes to be. And yeah, they also sell, I think it's like hardware, switches, routers, and firewalls. This is the kind of things they sell. You see Fortinet logo on the... So this is the hardware part that's kind of hard to disrupt. It's more... I feel like they're like a solid company all around, but this space is not going anywhere. Like no one's gonna suddenly just... Like a big company is not going to throw one of those away to just switch company, you know? So they're kind of stuck with the hardware. And as you see, the biggest part is security subscriptions, technical support, and others. I believe these two are not going to be the main drivers for a long-term investor. It's the subscription model. So if you're just trading this, of course it doesn't matter, but as a long-term investor, you want to see the subscription increasing every year. And if we look at free cash flow compared to stock-based compensation or operating, so the yellow is operating, the blue is free cash flow, and then we have stock-based compensation. They're growing they're growing the stock-based compensation. That's a 30 million increase, and free cash flow is increasing by 250. So yeah, compensation is taking part of it, but as they're putting more money into actually growing, of course, a part of it will go to compensation. Yes, something to keep track of, but they've been doing a good job. If you look back when they didn't grow, they didn't increase it as much, and now when they're actually ramping growth, that's when you see compensation pick up a bit. I'm not too worried. Cash compared to debt, very nice to see. Like they ran a really smooth ship, so to say, and now they're heavily investing for the future. Return on invested capital has picked up since 2018. WACC is the discount rate. Weighted average cost of capital is the amount of money it must pay to finance its operation. Okay, but it's nice to see it actually be higher. Return on invested capital be higher than WACC. If we look at profitability, 10 out of 10. Financial strength, well, they don't have a lot of that. So yeah, if we just look at this, it gives you a really green field view of the company. But then you look at the stock, oh, it doesn't have a momentum. People don't really care about it. And that's what you want if you want to buy a good business. Regions, Europe, United States, let's see, Asian Pacific. I wish you could click and see a geographical region. This is what I wanted. Let's look at this. Growing, United States is growing. Asian Pacific is growing. Other is growing. So they're taking market in every region. Oh, here you have business sections. I'm surprised product is growing has grown this fast. I think the most stable is subscription, and this is what you want to look at if you want to invest long term. Is a stable subscription because it's a low cost for the company and it's better margins than products, simply put. Tech support, I'm not a big fan of tech support, but it's a nice growth. They need to have tech support if they have hardware. So, and if we see what insiders do, we've seen some insiders buy. So the company is founder led, and yeah, they have good capital allocation, and they're also growing data centers and returning capital to shareholders with share buybacks with a 11% buyback yield, 5.3 billion. That's about a free 3% growth, like a year from 2020, I think. Yeah, Peter Lynch chart. Oh, maybe I don't need to do my calculations. I didn't know they had this. Guru Focus is a beast. Okay, why do you do this? 15? This is like an old thing, like you should buy a company because it's 15p. With companies putting out so high growth because of cloud, because of AI and all of that, and we have a lot of technology advancement. The talk of 15p being the base of every company being cheap is kind of stupid. So if you look at the median PE, and also if you look at you can't go, oh, it's 2009. See, it's never touched 15p. So you can forget 15p. But if you look at this, yes, the mediocre P, it's actually cheap. But I'll do a quick calculation later on, because this is just, so is this 60p? What is it trading at today? 44p. So they say the average is 60 and it's trading at 44. There's like 10-15% upside, 15% upside. Here's its competitors. I actually been looking a bit to CrowdStrike. I owned Palantir before, but I think it's too pricey for what they produce. Fortinet is the legacy company, so they have more quality, I'd say, but the other ones are trying to challenge them and get market share. And yeah, like I said, it's founder-led, good management, good capital allocation. It has, if you look at the CrowdStrike, it's no point looking at Palantir. They're not really doing much yet. They have a profit margin of 4.8, and if you look at Fortinet's profit margin, it's 23%. So if you want the best company in the industry, not maybe the fastest grower with that still has potential, that you don't put yourself in too much risk, Fortinet looks like a good choice. Just looking at the basic stuff. You should read the finances for yourself a bit more. Thing I'm most excited for is they reduced, or not reduced, their product revenue decreased by 4.4%, but the total revenue is up 10%. So they basically reduced the high cost revenue driver, and then service revenue increased by almost 20%. It's 19.8%. So service is growing way faster and products are slowing down. And that's what I like. Yeah. What more to say about it? Yeah, they raised their revenue guidance from 5.8 to 5.9. It's 100 million more revenue than expected. So yeah, if you look at guidance looks good. The company is solid. Sure, the stock price can move up and down, up and down. Net income per share increased to 0.57 from 0.38 per share. So if we look at ratios, just look at free cash flow yield is 2.7 now, but I bought it a bit cheaper, so I probably bought it around 3%. And that's where I like it. If I have a growing, stable company like Fortinet, high return on equity, high return on capital, and yeah, it's a solid business. So you can't really go wrong with owning Fortinet. Of course, it's not some speculative company like Tesla or, well, Palantir is not speculative, but people seem to believe that Palantir has endless potential and is going to 10x within 1 month. That's another topic. But yeah, I like Fortinet, and if I get more opportunity to buy at good prices, I'll probably buy more Fortinet in my bank. And it's everything for me is this a long-term investment, and that's what I think about. Not what is it gonna do in 1 year, what is it gonna do in 2 years. I'm thinking minimum 5 years, maximum 20 years. If we just do a quick calculations, Fortinet 2 years. So hang on, we know now the average is 60p, which I think is a bit too generous. So this is how bearish I will be. 20p, this is how bearish. That's 50. Let's just copy this. So I'm almost taking the margin of safety into the calculation here, because if you look at what Guru Focus is saying, this should be 60. Maybe I should put 160 just to see what they put for 20. What Guru Focus believes. That would be 151. It doesn't work on this kind of on Lynch calculations. That's why I think their average, they call it Lynch, but I don't know. It doesn't really fit. You should match it with, if you want to calculate like Lynch, you should take the average EPS growth rate. Think of it like the EPS growth rate is the same PE the company is expected to have. So it's one peg. Then the company is not overvalued, it's not undervalued, it's fair value, you know. So that will be 63, and the 30, that's 75. And then let's do the other one. So we're looking at 59, looking at 74. This is close to today's price, and 90. Yeah, but if we just look at it like this, the company is heading in the right direction. Of course, you can do more calculations for the next year, 2027, so on. But this is basically, I expect that I'll double my money in 5 years. Something like that. But I'll probably keep on holding after that. But of course, if you could get this company at $30, it would be great. The quality in a company like Fortinet is what makes the price so high. Yeah, they're not really super efficient when it comes to what it costs to run the factories and the employee cost compared to what the products produce. But the thing that actually makes a difference for Fortinet is the services, because they have a lot, like I showed before, all the software, and they're sticky. So a big company starting to use their products can't really switch to CrowdStrike unless they want to change their entire infrastructure. Yeah, they're in a good position to grow in the future. I like them. And now everything is up to you to do the research and actually look what you want out of the company and decide if you want to own it and what price you want to own it at. You pay for value. That's the thing. What kind of value does Fortinet give you? High growing service and subscription model, very loyal customer base. You can sleep at night without having to twist your stomach upside down like Tesla shareholder. Tesla stock is up today. Oh, no, never mind. What? It was so funny. Yesterday, all the Tesla bulls on eToro was like, "Oh, we're going to get full self-driving," and I made the comment like, "Yeah, but European laws is basically put down that it's not gonna be allowed to have a car without like someone touching the wheel." So I don't know how Tesla is going to solve this until first quarter 2027, because they have to go up against lawmakers. And someone agree with me, I guess, because I was sad because I was down 1%. Yeah, I was like, it was 40s. Yeah, because I called it. But I think we're getting some kind of edge on Tesla. Now I'm going off track. Sorry, maybe you're interested in Tesla. So I'm interested in Tesla, but I don't want to hold it. But it's such like, I bought it down here and I sold it up here. And then I've been just sitting by the sidelines watching all these people. Oh, this was my prediction, by the way. And it, yeah, and it seems like it's still having trouble to cross here, and they're going down, and this doesn't look good. So basically maybe we're gonna see 170 again. Yes, speculation. Yeah, it's interesting, but they have so much to do, so much expensive things to do. And that's why I don't want to own something like Tesla. If they only focused on making the best electric vehicle instead of making a mediocre robot and a taxi service. He always targets public transport. Before it was trains, now it's the taxis. That's how you increase the stock value, by the way. Say that like one big business is going to go away in 1 year, and then the stock goes kaboom, and then it crashes. I think Elon Musk, he got rid of some of his holdings when it was high up, and he bought. And on the way, he also made the shareholders buy up his solar company that was going to go bankrupt, and now he wants them to buy up his AI company that's going bankrupt. It's fun to see. It's fun to see. People don't seem to look at the company with like an objective view. They're just stuck in the hype of Elon Musk. Anyways, hope this has been fun or educational in some sort. Yeah, I like Fortinet.